Right. Well, our next guest says today's unemployment report reinforces how many challenges lie ahead for all of us. We're all in this together. Unfortunately, guys, it's a tough one. John Silvia, chief economist at Wells Fargo Securities. He's also a Bloomberg Best economic forecaster and the author of a newly published book, Dynamic Economic Decision-Making: Strategies for Financial Risk, Capital Markets, and Monetary Policy. John, thanks for joining us from Charlotte,
Sure.
North Carolina. Great to have you on.
Thank you. Absolutely.
You have said that firms are desperate to cut costs, and if they're desperate to cut costs, they're not hiring. So when does this vicious cycle end?
Well, I think it basically comes down to when do the firms have the confidence that the economy has sustained economic growth, at least at a pace above what they can service now with their existing facilities. And I think the answer is right now, the answer is no. And I think that's why you've got this real decline in average monthly payrolls, because firms are just not convinced that the future is all that bright.
And is the onus on the government to provide a solution, or is it on small business? I mean, where does the leadership come from?
Well, I think the leadership has to come from business itself. That's what's going to generate the jobs, but it's going to generate the outlook going forward. Government only sets the conditions for the playing field. How people play on that field is all up to them. And I think the challenge right now is for government to have a stable playing field, maybe in part give us some stability in terms of tax rates, regulation, guidance in terms of monetary policy, but then let the private sector do it. And right now, the private sector just doesn't have confidence that there's a good level playing field, and therefore they're not willing, at least in part, to move forward. But the big story is we just don't have the aggregate demand in the economy. There isn't demand there, and labor is always a derived demand.
So where does the demand come from, John?
Well, in part, we've seen good export gains. We've seen some turnaround in terms of apartment building, multifamily housing. We do see some consumer spending gains, and we've seen some pretty good equipment and software gains. But there isn't a silver bullet here. There's not one thing that gets the economy going. It's a whole bunch of little things that are moving forward. But over the last 30 or 40 years, we built a lot of excesses in terms of state and local government funding on a lot of projects and infrastructure, employment in state and local government. We had a lot of housing that was overbuilt. That's going through the correction. And the consumers took on a lot of debt. Those three things are going through their correction phase. Probably in some cases, certainly in housing, maybe another year or so of correction. It just takes time.
Hey, you talk about another year for housing. Some of these other aspects of the economy, the same time frame, a year, 2 years, 3 years? What does it take?
Yeah, I think some state and local governments still have excess capacity in terms of what they do, how they do it, and the number of employees that they're asking to do it. Some states, I think the majority of states are probably okay at this point, but there still are some states that have a lot of built-up capacity for the last 30 or 40 years. They don't have the revenue to support that capacity. They're going to have to downsize. I think for a lot of American consumers, the buildup in credit in the last 20 or 30 years has also put many people, especially middle income and upper middle income people, in a situation where they spent and tried to live a lifestyle based upon their availability of credit. Now that credit's not so available, they're going to have to change their lifestyle.
Hey, John, is it possible that changing the lifestyle and getting back to only buying the stuff we can afford is longer term a much healthier balance?
Well, it certainly is a much healthier balance long term in terms of, what people can live on instead of extending themselves with the credit. So it is a much healthier balance, certainly in the housing market, certainly in the state and federal government, as well as in the local, individual consumer. It's a hard lesson in terms of trying to live within your means, but that is the challenge we have in America right now, and the transition is not a lot of fun.
Now, is there any place, granted you're an economist, not a stock strategist, but given your outlook that this thing is going to take several years to pan out, where do investors hide? Where is Wells Fargo telling investors to hide?
I would say when you look at the economic numbers, equipment and software spending in the United States has been far stronger than it has been in pretty much any economic recovery since the 1970s. So that is what we're doing. We want to communicate more. We want to communicate faster than we did before. We want to process information faster. That is one of the two keys. The other is exports. The export growth in the United States, we have a lot of firms that are truly globally competitive in the United States, and those firms, those multinational firms that have a competitive advantage are exporting, and that's another area I would look at.
All right, John Silvia from Wells Fargo, we thank you for joining us from Charlotte, North Carolina.
Sure.